Thank you for joining us here on the Finance Magnates podcast. And today we'll have Gavin from First Global Credit to talk about AICoin and crowdfunding. So let's begin. Gavin, would you please introduce yourself?
Sure. Well, thank you for having me today. It's a great pleasure. First Global Credit, we started First Global Credit about over 3 years ago, and the idea behind it was to provide cryptocurrency holders with the same level of investment choice and investment capability as holders of traditional fiat currencies. And to that end, we introduced the ability for people to invest in stocks, invest in bonds, invest in commodities, but with the added benefit that using the power of the blockchain, we can make the whole process both more secure and more transparent. So the idea is people can see where their funds are being used, and they can have a level of security about their investments that simply isn't possible with traditional brokers or traditional finance houses. So with AICoin, what we've tried to do is really take that paradigm, take that set of values, and apply it to the area of equity investment, of VC investment. So what we've done is we've created this AICoin ICO to provide cryptocurrency holders with the tools to enter the world of private equity investment and really take the funds on at their own game and beat the funds at their own game. We've tried to achieve this by providing a combination of some quite advanced deep learning and AI models. The purpose of those is really to do short-term trading with cryptocurrencies, take short-term profits, and those profits then feed into an investment pool. Mm-hmm. That investment pool uses the wisdom of the crowd. It uses the combined expertise of all of the coin holders to make longer-term investment decisions on seed companies, on new ICOs, on other opportunities, focused on the areas of artificial intelligence and on public blockchain, two areas that we believe are hugely influential and hugely disruptive over the next 5 to 10 year time frame. So that's really the idea behind AICoin. It's not just advanced artificial intelligence models. It's not just crowdfunding. What it is a synergy of the two things, bringing both together, working. I mean, the logo is a yin and yang symbol, and that really sums it up. It's bringing those two elements together, working together for the benefit of the collective coin holders, which is how we've structured the ICO. So that in a nutshell is what we're trying to achieve, which I'm sure has probably created more questions than it's answered, but that's the sort of starting point.
Yeah, well, I just want to start by trying to simplify it, at least for people who are just hearing about this field. Obviously, for us, it's we're swimming in it, but for I think most people that are traders or investors, this is still new. So just to explain about the basics, AI of course stands for artificial intelligence, mm-hmm. And an ICO, it's an initial coin offering, which is a way for a new project to issue, I would say, equity, or or you can think about it as a digital form of equity in a new project.
Absolutely.
So by participating in the AICoin ICO, you're basically buying a part of the system that, if the project will be successful, will rise in value.
Absolutely. I mean, something which is fairly unique with the ICO structure that we're setting up, the software is already in place. So exactly as you say, normally the software is in development, and part of the ICO funding is really to allow the developers to continue with that development. Where we're quite unique is the software is already operational, it's running, so 100% of the funds are actually will still be collectively owned by all of the coin holders. So the money doesn't come to an external party. The money is held collectively by the coin holders and used for investment purposes. So that's slightly different to a conventional ICO. The models are provided by the system provider, which is First Global Credit. So we provide that into the ICO to then use those funds to make trading decisions on the cryptocurrency space, and investment decisions from the profits of that. And I think it's perhaps worth just summarizing the trading aspect. At the moment, cryptocurrencies are a fairly new field in trading terms. So while foreign exchange, stocks, bonds, quite well established, and obviously a lot of banks have their own trading models that are involved, in the cryptocurrency field, it's still quite, it's very new. And so there's still a lot of market inefficiencies there, areas where a trading model can identify discrepancies in the market and take advantage of those discrepancies. So that's where the AI model comes in. It's looking for those short-term anomalies in the market, looking for the short-term opportunities, and 24/7 trading to take advantage of those opportunities to bring the prices back in line and generate profits, which then are used for the investment pool, added, excuse me, to the investment pool.
By inefficiencies, by exploiting inefficiencies, you mean like arbitrage trading, if I get it correctly?
Yeah, not quite arbitrage. And what it's doing is it is pulling in different the same asset from different markets. Sorry, excuse me, different exchanges. But what it's really looking for is when those prices diverge, it tends to indicate market stress in one way or another. Not always negative, positive, but it's identifying that there is likely to be a significant move. What it's then doing is executing trades. Now, where the arbitrage comes in, it won't buy and sell to do a true arbitrage. What it will tend to do, it will take the information, make a judgment on direction, and then buy the lower priced exchanges. So it will use arbitrage in that sense of the word, but it won't be buying and selling two different exchanges at the same time for the same asset. Though it may buy and sell different asset types, it will look at into market relationships and trade that basis.
Mm-hmm. And it seems, from what from the explanation, there's two tracks. One for I would say the short-term trading, and the second for the long-term investing.
Absolutely, and we've intentionally developed those two pillars of trading. One thing that we've identified, and one area where VC funds have a real advantage, is the pool of capital available to them. They have reserves set aside so that they can make initial investments, and then if the market changes or if something new comes along, they've still got funds available that they can invest in that new idea. Or even if one of their portfolio companies starts to do well, they can use extra funds to add to that company. Now, traditionally, angel investors have suffered from not having that pool of reserves. So what will happen is that even if they're right and they make that initial investment, they may not have the funds available to then add in the next round of financing. So frequently they get diluted. They may have a great idea, great company, but they get diluted by the next round of investment. So the approach we've adopted is we use the short-term trading to continually top up the investment pool. The investment pool is then used for investment in seed companies, and by continually topping it up with more profits, there's always funds in there which we can then deploy either to a new great idea that comes along or to an existing company that we've invested in that's doing well and needs additional funds. So it's to overcome that limitation of needing to wait until one of your seed investments, you get an exit to have more funds to invest. It keeps that flow coming in so that there's continual flow of new funds to be invested and deployed as the token holders choose to deploy it.
Mm-hmm. And you've mentioned angel investors. Who do you see as your investors? Is it people that are looking into investing into artificial intelligence? Is it like speculators that think that the AI can do it better than them? Who do you see as the potential investor in AI?
We're actually finding two classes of investors. Yes, the speculators are investing, are looking to invest because exactly what you suggested. They like the idea, they like the technology, they see the benefits of it, and they want to use some of their funds almost as a hedge against their own trading, because they recognize that as these new models come into and are deployed in the cryptocurrency space, it's going to be harder for them to make profit in the markets. But we're also seeing what in First Global Credit terms is our passive investor base. These are investors that don't want to actively trade the markets, but do want to use a cryptocurrency to earn additional returns. So for them, it's a way of pooling with other investors and being able to make investments because they believe in the blockchain, they believe in the in artificial intelligence, either one or both of those, and they really want to invest in companies in that ecosystem. And it's a way for them to pool their resources with other like-minded investors and make those investments. So we very much are appealing to two almost diametrically opposed parts of the marketplace.
That's interesting. And what type of AI projects do you think that once the the pool of revenue from trading will come in? What type of AI style projects are you looking to enter?
Absolutely. We what we're trying to do is very much be a little bit agnostic and allow and be guided by the token holders, because we're structuring, as I said, very much as a collective. So we're trying not to dictate. But one area that we would put forward as beneficial is technologies where we can work with the company to maybe apply their advances to the work that within the AICoin paradigm itself. Because I mean, we recognize that while we've got a great product and a great idea on day one, there are new people coming out all the time with great new ideas. And if we can start working with those companies and creating joint ventures, we can also use their technologies and their advancements to enhance the value of the AI trading model itself. So really, it becomes a virtuous circle where we invest in the companies, we work with them, we bring some of that technology in and license it from them and improve the performance of the AI technology itself, again generating more profits, which we can then invest in other companies. So we see a real synergy effect on that approach as well.
Mm-hmm. So it's basically more likely to be some algo trading AI rather than a I don't know, a new AI for the automatic management of drone system around the city or something.
Not so much a bit of a domain area. It would almost be a non-similar domain area, but where the techniques they're applying are different to the way we approach it, where we can work with the developers and say, oh, that's really neat. How do you think it would work if we applied it into this fast-moving trading environment? Do you think it's suitable? How could we integrate it? So I wouldn't see necessarily us investing in other trading companies, though I wouldn't exclude it. But it's more looking at their technology and thinking, that's a neat idea. How can we work together to use that to enhance what we're doing, as well as fund you with the domain area that you're looking to move into. So it's more the types of techniques they use that would be of interest to us, and how they're looking at the deep learning problem, because at the moment there's lots of ways that people are starting to investigate and use that technology. And as I said, we're not going to pretend that the way we do it is the only good way of doing it. So it's much better to have that pool of partner companies that you can work with to come up with something that uses all the best ideas.
Mm-hmm. And how do you envision that cooperation happening? Would it be, would you invest in companies that issue their own ICO, or will it be through companies applying to have an audience like VC style?
Sure. The structure that we're putting in place allows both. The ICO is very straightforward because everything's on the blockchain, so the collective would own those assets in the same way that it owns the cryptocurrencies that it's trading. But there'll be a legal entity set up in Singapore which will own, if you like, real world assets on behalf of the trust for the coin holders. So that allows us to not just be focused on ICOs, which I know a number of people are looking at, but it also allows us to look at equity investments in companies, convertible debt products, and more conventional funding styles from companies. So it gives us the flexibility to invest in those and hold them for the benefit of the coin holders. And then when they're realized, then the funds go back into the investment pool in the same way as they would if it was an ICO.
I see. That's an interesting structure, I think, for people in the Bitcoin, Ethereum ecosystem that that want to have exposure to real life assets, as you put it.
Yeah, absolutely. Because it is a problem with the standard ICO model that it strictly limits the type of investment you can make, and that's a limitation that we didn't want to put in place. So.
Yeah. Can you expand a bit about how your ICO is different than most of the ICOs that we're seeing right now?
Sure. As the key difference for us, two areas. First is the use of the funds. The use of the funds is 100% for investment purposes and trading purposes. So the models are already funded, are created, and that's been funded, and the infrastructure is already in place to manage those investments. So that's one area that is quite unique, that we don't need to take those funds and use them for development purposes. The other difference is the legal structure that we're employing. The legal structure is the closest thing to think about is an old style cooperative. It's the assets and the coins are collectively owned by everyone. The AI coins aren't purchased. From a legal perspective, they're exchanged. So you're exchanging one crypto asset for another crypto asset. You deposit your Bitcoin or Ethereum, and you receive AI coins in return. Those AI coins give you voting rights over how those assets are collectively deployed. So everything that is material to that collective can be voted upon by the coin holders, and that's everything right down to ultimately if they decide to liquidate the collective, that's within the remit of the collective. If they vote and pass that resolution, then all the assets would be disposed of and exchanged back to Bitcoin, assuming that's a dominant cryptocurrency at the time, and distributed back to the collective. That's back to the individual coin holders, excuse me. So it very much is, and what we've tried to do is create something that wasn't possible previously because the technology wasn't there. But the blockchain gives a possibility for an organization that is genuinely distributed and owned by those individuals. So not like a corporation where individuals own it and all the decisions are made by an executive, but something where an organization where the key decisions are actually made by the shareholders effectively as well. So it's quite different from a conventional corporation once you actually drill down into how the decisions are made and how the company is operated.
That's actually an interesting topic. So would they have the coin holders, will they have an ability to vote on which company you invest in?
Absolutely. So all of the companies that are looking for investment will come through an investment committee, and that's really there to not to weed companies out, but to make the options manageable on a single vote. There will then be the top 5 will be presented to coin holders, and they'll have the option to vote which of those 5 investments should be invested in, or a 6th option, which is no investment this period. Once that vote takes place, the winning company is the one that will then be voted on. Just because the investment committee decides not to include a company doesn't mean it gets rejected. What we're doing is continually reevaluating all those companies, and the only time they'll be removed is if the coin holders vote none above that as an option. So it really is something that none of the coin holders as a whole are not interested in. So we're trying to make it, trying to strike a balance between full democracy and manageability, because if you had 100 companies that your coin holders are discussing on the forum, are being presented, it would just become unmanageable. So the committee is there really just to provide pace, for want of a better word, the companies coming in. So we've always got a manageable number of companies to discuss for the next voting period. So, but yes, the ultimate decision investment absolutely is with the token holders.
Mm-hmm. It's very interesting, you know, the new models of let's call it corporate governance or new structures that we're building to see, you know, how do you reach agreements on the blockchain in a way that wasn't possible. So
absolutely. And also the beauty is it's very transparent. It's all on the blockchain, so you can absolutely anyone can look and see, yep, they were the votes that were cast, and that's why this company won. So there's not any dispute about which the winning investment was for that period.
And if I have more coins, do I get more votes, or how does that get calculated?
We do. So it's weighted by coin holding, so it's proof of stake, the way that that is calculated, and so larger coin holders do have a larger say in the investment, but that's countered by we have a large a number of the subscribers. We've got a large number of smaller subscribers. So while an individual will have more of a weight than another individual, as a collective, even the larger investors are dwarfed. So that's the benefit of it, that you don't have any single investor that becomes dominant and effectively decides what those investments are.
Yeah, it's important to have a long tail if you want to have you know, uncentralized decisions.
Absolutely, and also because the coin will be, in addition to being an investment approach, will also be tradable on the number of exchanges. That allows people to effectively increase their stake if they want more of a say in the investments, or to take some of their profits. I mean, some people obviously over time may want to realize some of the profits. So the coin will be tradable on various exchanges to allow people to take profits. Though obviously our hope is that people will invest in it because they want to hold it long term and really participate in this new governance model. That's where we see the real excitement.
But basically, the profit taking will be done through liquidation on an exchange, not via dividends. I saw some people were asking.
Correct. Yeah, we the initial model is through liquidation. Although again, the coin itself does have the capability to distribute dividends in Ethereum, in Ether. So it's perfectly within the control of the coin holders. If they decide they want to start paying a dividend out, percentage of the profits and dividends, then they can propose it to the vote. It goes to the vote. If that's passed, if that resolution's passed, then we will execute that decision on their behalf. So the coin itself has the capability to distribute dividends out to the coin holders. So it's an option that's always open to the collective if they choose to vote for that method of distribution.
And what about
we've tried to do is make the model flexible so that we don't know all the answers. The coin holders, it is their cooperative, it's their collective, so they should decide how those profits are used and how they're distributed amongst them.
Mm-hmm. And what about the ICO mechanism itself? Because right now, ICO investors are approached with, I wouldn't exaggerate if I say 10 ICOs a day, saying come find my project, and some of them are I let's not refer to ones that are obvious, trying to just to grab money, but some of them we saw in retrospect, we saw that they were not a good investment simply because they took as much money as they can, and virtually diluted the the investors. So how do you reassure prospective ICO investors that this is not the case?
I think there's actually two questions there. The first is the dilution aspect, and the benefit for our investors is the model we use. 100% of the funds stay within the collective. So let's say people invested $10 million. That $10 million doesn't go to us, and they get the coins. That's their $10 million. If it was liquidated immediately, they would simply get the $10 million back. So there would be there's protection in the way the funds are handled. The second part of the question, I think, is a concern, and that is the maximum amount that can be sensibly deployed, for want of a better word. There is a limit to what our models could trade and make money. And that's true of any market, but it's especially true of cryptocurrencies because it's still quite a new market and with limited liquidity. So from our perspective, we will put a cap on the amounts of funds that we will accept, and that cap will be absolutely no more than get the numbers right here, 4,000 Bitcoin, which is $10 million in effect. Again, because that's all on the blockchain, the beauty we have is we look at the timestamp and we can identify which transaction was the final transaction that's acceptable. Any transactions after that date simply get returned to the prospective subscriber. So we have chosen that as our limit, absolute maximum limit, and that's an amount that we believe the models could quite comfortably be deployed to execute in the market without, and still allow room for growth. Because I think that's the other thing to bear in mind. It's not just the amount of funds you initially have. It's as you earn profits and you've got more funds being traded, you want a certain headroom before the market expands. So that means we're not going to be a dominant player in the market. That means that we can trade the market and be effective in trading the market, and the model can work the way it's designed to work, with profits going out for longer term investment. So that's the parameters that we've set for our ICO. I absolutely take on board what you've said, that there have been these ICOs that have decided to take on $100 million to trade cryptocurrencies. Now that to me it would be a concern if I was investing. It's not a concern with what we're doing, because to me that will just be more market inefficiency for our models to capitalize on, because it's a large amount of money to try and deploy into the marketplace.
Yeah, definitely. And what about looking at more liquid markets, like Forex and gold, stuff that are, where maybe there aren't such big inefficiencies, but still a AI system can
Yeah.
Mm-hmm.
Yeah, the technologies that we're applying actually have come from that field. A lot of them, we've done some work previously with commodity companies to use models to help with decisions on hedging exposure, that kind of thing. So we've got they've taken that leap. We've taken that leap from the commodity area into the cryptocurrency area. Now the opportunities are still there, although, as you say, they're much tighter in regular markets, because a lot of the banks and a lot of the large hedge funds are utilizing this same type of model. That doesn't mean we wouldn't look at it. I think one of the things that we will look at is adding to the mix and then proposing it to coin holders as an additional option that they have to trade additional markets. But again, it won't ultimately be our decision at that stage. It'll be the coin holders who look at the results and say, yep, we would like to use that model to trade these markets. It's again, it comes back to our governance model, that we can propose changes, but the coin holders will be the ones that make the ultimate decision on that.
Mm-hmm. And do you think that there's any chance that we'll see the same situation develop in Forex or you know what, let's look at the equities. Let's look at stocks, right? In US stocks right now, you have, you know, a couple of companies that sit very close to the servers, and basically, you know, they get all the arbitrage and all the inefficiencies. They get to there first because they have, you know, the fastest system, the fastest connection. Do you think that's something that might be an issue in cryptocurrency trading one day, or is the nature of it is too decentralized?
I think the decentralization helps. It helps prevent that, but I do think that my personal view is that you will start to get liquidity aggregating to some of the major platforms. I don't think it'll be one. I think it'll be a number of them, and as we approach that kind of scenario, I think you could absolutely get to the situation where you need to be, if not hosted at the same place as the exchange because of its nature, certainly have tight links with that exchange. And I think that's something which we'll monitor. Through FGC, we monitor on an ongoing basis anyway, because we have links to a number of the large exchanges, excuse me, to automatically execute our hedges, which we do. So we've kind of got a head start to a number of these ICOs because we've already got that hedging platform in place. So if you imagine when the AI makes a trading decision, it then feeds through to the hedging algorithm, which isn't AI based, it's purely mechanical, but it's looking at the various exchanges and seeing where the best opportunities are and executing the trades on those exchanges. So we, in a very scaled down basis, already have that technology in place, and we monitor what's out there, and we'll increase our infrastructure as the market becomes more mature, which will benefit the AICoin holders as well, because they're using the same infrastructure to place the trades, albeit on different accounts. So because all of the accounts are held separately.
That's very interesting. Speaking of which, I saw that you did an AMA, an Ask Me Anything on Reddit. I want to ask what question surprised you the most? What question you know, you found most you know, most you know, thought-provoking?
Sure. I think the first thing that was that surprised me is clearly how badly I've been putting the case across for AICoin, because there were some people that it hadn't been clear what the combination of the two pillars of the investment were about. So I think that was certainly a lesson to me that that I needed to be clearer on the presentation. But I think from a practical perspective, the questions around, I mean, one you raised earlier, the dividend aspect, is not something that I had considered so much, because for me it was going to be a stock buyback type scenario where the coin simply bought back the stock, the coin increased in value, and if people wanted to liquidate, they would sell part of their holding. But clearly there's an element of the community that would feel more comfortable with a regular payout of some of the profits and dividends. So again, I think for us, it's one thing I love about this model is we're not the ones making the decisions. We're there to execute what the collective want. So for me, it's I think there's going to be a lot of changes in the first 6 months, which the collective want, that we hadn't considered. And again, it comes back to what I said earlier. We've got some good ideas. We haven't got all of the answers, and it's good to, the whole power of the model is pulling everyone together and getting people's combined views and combined expertise to come up with the model that works best as a collective.
That's very interesting. Yeah, I think, you know, we definitely, like we talked about governance, these are definitely you know, interesting times where you essentially have to because of the ICO model, you have to take the consideration of you know, people that are participating in a way that's, you know, a normal trader will never have that same level of you know, influence over an IPO for sure.
Absolutely, yeah. It gives direct contact, for want of a better word, between the person making the investment and the end consumer of those funds, whether it's our model or whether it's the developer model. There's still that direct contact and influence where perhaps a developer will need to do things slightly differently because most of his ICO participants want it done that way. And I think it's going to be a learning exercise for everybody as this evolves.
I see. Okay. I see we're past the 30 minutes mark, and people get they send me feedback. Why is it so long? So
you let Gavin drone on for way too much. Shut him up.
No, it's really interesting. So I just want to thank you, Gavin, and ask: is there anything that you want to summarize or anything you want to add before we wrap this up?
I mean, I think just one thing to mention is the website for the coin subscription is AICoin.io, and the official subscription starts on the 17th of July. There's a pre-subscription period now, which is by invitation, and so yeah, if people go along to the site, see what we're about, and if they've got any questions at all, I can be emailed on gavin.smith@firstglobalcredit.com.
Okay.
And I'm happy to answer those questions.
Thank you very much, Gavin. And certainly, if you're looking for a good ICO opportunity, check out his website and hit him up on email. And I just want to say thank you for watching another episode. Please share and subscribe so you can see the next interviews as they roll out. Thank you very much.
Thank you for having me. Bye-bye.
Bye, Gavin.